Good morning, everyone. Thank you for signing in to our July edition of the AgEcon Current Issues. This morning's presentations, there's two of us, Roger Sahs giving you the land value update. Then I'm going to follow that up with a very quick, down and dirty discussion of some of the tax law or some tax things that are happening, not really law, but things that are happening to us in terms of the recovery rebate and things like this that we're wondering why certain things are happening and others aren't. So anyway, if you have questions for Roger, type them in the chat box. We'll give him those questions at the end of his presentation. As always, this will be recorded. I'll give everyone credit that attends. Other than that, Roger, if you want to go ahead and get started, we'll get rolling. Thank you, sir.
Okay, thanks, JC. Well, rain in July is always a good thing. I'd noticed that west of town here that we've had some pretty decent showers. So let's hope it does continue. Well, it is time for our annual update on the land value markets here in Oklahoma. And so I plan to spend a few minutes talking about some of the recent trends and patterns and some of the factors driving the land markets here in Oklahoma. We'll review what's going on in the farm economy for a bit and how that translates into the ability to pay for farm ground. And at the end of the presentation, I'll add my 2 cents worth, I guess, when it comes to where we might be headed for the remainder of 2020. Really, the bottom line of this presentation is that hopefully I can provide some good information, because it really is critical to have that information and analysis when you're a participant in the land transfer market. So before we go any further, it's really important to note that according to the Ag Census in 2017, the ag real estate markets in Oklahoma is comprised of about 1/3 cropland, including the soybeans you see in this picture here, a couple 100,000 acres that are planted. But the other 2/3 are on pasture ground, and we have literally millions of acres here in Oklahoma. It's pretty close to 20 million, I believe. So growing forage is big business in this state, and the livestock economy, especially the cattle, your mom and cow operations, are the big ticket item that utilizes that forage base. When you compare cash receipts alone from crops and livestock statewide, 80 cents of every dollar received comes from the livestock sector. So while the grain markets do, influence those cropland values out west, it's really the livestock economy. That's what's buttering the bread. That's what drives the bus in terms of influencing the overall real estate markets in Oklahoma. So let's go on to the next one. All right. So, before we talk about the 2019 results, I wanted to give you a little bit about a background as to our study. Our land value study provides a market-based assessment since it reflects a sample of the sales transactions that do occur in Oklahoma annually. The typical farmland transaction was about $340,000. Obviously, there were quite a few less than that. A number of them were in the millions of dollars. The one really good thing is that, the more data points we typically have in our study, the better it does reflect the land transfer market. And so we had over 1,500 sale tracts of which to examine. And that's the largest number that I've had the privilege of looking at in the last 12 years. So USDA, NASS, and I'll cover some of their results also in this presentation. They also provide some information on land values. They look at the markets from a little different perspective. Theirs is survey-based instead. So they ask their respondents, these could be operators or owners of a particular land segment, as to what those values are. And then they compare those values to year earlier numbers, and then they will compute those percentage changes. And so even though the perspectives of the markets are a little bit different from our angle and theirs, the results are really quite complementary. Our sales data is provided from the Farm Credit Associations of Oklahoma. We're very grateful and appreciative of their assistance with our research and educational efforts. So this is sort of a composite of what's occurred over a long period of time, but I really wanted to focus on the 2019 numbers. And really in 2019, the markets have been pretty resilient. So you look at that sort of a burnt orange line there. and that's the all land value average, and it did increase about 4%. But you can see sort of a divergence between cropland and pasture, pasture being that dotted or dashed green line, and the cropland being that solid green line. And so pasture continues to appreciate somewhat. Cropland has undergone some corrections, been moving mostly sideways. In fact, this is the sixth consecutive year that the pasture values have exceeded in terms of performance over cropland. You know, typically, land markets are influenced by, farm income and credit conditions, and I don't have the latest 2019 numbers for net cash or net farm income for Oklahoma, but I do know, in 18, net cash income was about 26% down, and net farm income declined 35% from that high water mark in 2014 when we really had stellar prices both in the grain markets and in the livestock markets. So, I don't care how you measure it in terms of removing those dollars, it really does impact, the spending on Main Street, and also in the ability to pay for land rentals and of course for land itself. So this is sort of a composite of all the regional numbers as well as that statewide average. And just because the statewide average was up doesn't necessarily mean that the land that you own and operate performed in that same fashion. The change in land values has not been uniform across the state. You can kind of see that by those regional numbers. It really can be difficult to interpret a state average when so much variability does exist in land values based on the quality and the quantity of land in any given location, those local supply and demand fundamentals that are kicking in. The overall average is really unreflective of any one market. It's important to remember that. What is important is that when you're averaging the price per acre from all sales across Oklahoma, what tends to happen is areas with high sales volume does drive that average. And we'll talk about that in just a moment. So anyway, this is another sort of a take on all of those regional numbers as well as the land utilization types. And this is over, that 1 year in 2019, 5 and 10 years in terms of a time series.
Sure.
And so we'll look at some of those, recent trends and focus on some of those numbers here. A lot to digest. You can digest these on your own later on. But I wanted to really focus on, some takeaways from the slide. One being, cropland tracts usually comprise about 15% of our sales database. Almost all the cropland tracts in our database is located west of I-35. Probably no big surprise there. But the takeaway on, the statewide average cropland is it has witnessed some weakness over the past 5 years. In 2019, essentially a flat market, has declined somewhat over the past 5, has shown some appreciation over the past 10 years. We have seen several years of poor commodity prices in the cropping sector over the past several seasons, and so we've witnessed some market corrections since that peak in 2015 actually in our study. Another observation is that when you move on to the pasture side, over half of the sales tracts are classified as pasture in our study, and almost half of those are less than 100 acres, and about 80% are less than 200 acres. So when you compare those numbers and those values versus the typical, say, cropland tract, which is about a quarter section in size, and those values per quarter section are not near as high as some of those smaller pasture parcels in our study. We have a lot of those. And that's why the statewide average for pasture ground is higher than what you might expect. And in fact, it does appear higher than cropland. So the markets in the eastern regions of the state is, where they are predominantly pasture have generally outperformed those in the west, especially over the past 5 years. The areas out west have given back some of those double-digit increases that we experienced earlier in that past decade in those cropland markets. But when you look at it over that 10-year horizon, things sort of average out and they're pretty close concerning those performance levels on cropland, pasture, all tracks. Okay, so let's focus on this for a minute. You know, I do spend a lot of time on annual averages. I utilize that. Of course, that's simple statistical procedure in my study. But also, I look at that 3-year weighted average, and you know, the 3-year weighted average is a procedure that allows, I feel, some improved reliability when analyzing those trends and patterns over the years, since it tends to smooth out those year-to-year variations. And so the values as shown by the series of data points in the brown line are weighted based on the number of annual sales during any given 3-year period. And so that final data point on that brown line, which is 2018, that represents 2017, 18, and 19 sales data that's used to calculate that particular data point. And so, like I said, I do utilize that quite a bit because, for instance, in the Panhandle, don't have a lot of sales volume there. So, you know, the composition, the composite of those sales tracks in any given year do change. Depends on how many cropland tracks I might have to analyze versus pasture, how many of those cropland tracks are irrigated. So there can be a lot of year-to-year variability in those averages and what's driving those averages. And so, you know, the weighted average, which is the brown line, tends to smooth out those annual variations as shown by the blue line. And I would surmise that the markets in the Panhandle essentially are moving about sideways over the past several seasons. So then when we use that same procedure with all the other regions in the state, and I have 9 of them, and I broke them out into sort of some basic color hues here. So the reds represent the western third of the state, the greens the central third, and the blues the eastern third. And one thing you might notice is that the eastern region still shows some upwards momentum, while the western regions, where most of the cropland is found, have essentially leveled off. So then when you focus on the cropland, the same patterns sort of come into play. Once again, it shows that the cropland markets in the western half of the state have undergone some adjustments and corrections over the past several years. In fact, the north central region has probably undergone the most or the largest correction in their cropland markets. But then when you focus in on the pasture side, yeah, we do see some recurring themes of leveling off in the west and strength in the markets in the central and eastern portions of the state. Like I said before, many of the transactions in our land value database, especially in the eastern half of the state, are less than 100 acres. I've got a lot of, say, 40 to 60 acre parcels, you know, that are included in this data set. You know, a good number of these acreages do represent some of your small-time operators. It could be a small-time livestock operation with a few mama cows or a few horses, sheep, or goats. They may have a few hay bales that are utilized off of that. But you know, the fact of the matter is that most of their livelihood comes from off-farm income. Yeah, they may be commuting back and forth between their residence on that small parcel out in the country, but they have their jobs are primarily in town. That's where they receive most of their living from in terms of income. They might have some recreational interests also. So you see some of that urban influence or some non-farm influences that are occurring out here, but the fact that ground is still employed in agriculture, we do include that in our data set, well, you know, within the study. And so the question might arise, well, how do our numbers compare to USDA's? Well, you can see that, you know, the trends are similar, but they're not identical. Of course, our sampling and statistical measures are a bit different. You know, we're looking at them from a little different perspective. You know, you have a survey-based impression of the market, which is USDA, versus a sample of the actual market sales, which is ours. You know, USDA surveys were showing about a continued increase in those markets, sort of a steady increase into 2019. Our study showed basically a flat market, and we've undergone some corrections since about 2015. of about 11%, in fact. But now it appears that both estimates might be trying to converge as we go forward in 2020, and we'll just have to see how close those numbers do get. So then when you move on to the pasture side, the values or our values are consistently higher than USDA's, but you see those trends and patterns are really quite similar. Once again, we have a sizable number of our tracts that are less than 100 or 200 acres in size that are priced several $100s higher, per acre than some of those or larger tracts that you might find out west. So where are the land markets headed for here, from here? And that's a $64,000 question. I get asked that quite a bit, and you might also receive those kinds of questions. I ask these old boys, they don't know, and I don't know for sure either, but we do have some clues and some clarity as to what might happen to land markets down the road. And that really boils down to several key factors that influence the land markets in any given year. It's really a balancing act between those interest rates, all right, and the commodity prices and resulting farm incomes, your debt levels and credit conditions, any assistance funding provided by the USDA, and the participation of these non-farm investors. And, some of these influences do pressure the markets. Some of them are supportive, but it just depends on how much weight are you placing on any one of these factors, and that really does impact the balancing act of all of those factors when you weigh everything in. So we're going to focus in on some of these factors and see how they might be influencing the markets. So first, I'm going to talk about the interest rates. Interest rates have been really quite low. We're in a low interest rate environment. We've been that way for several years now. I think if you recall, a year ago, I was looking at a gradual increase in those interest rates. But of course, since the first of the year, a lot of these interest rates have declined substantially. In March, the Fed dropped its target rate, which is the interest rate for funds lent out by banks, by a full percentage point. Essentially, it's close to zero. So I think it's like 0.25%. So a lot of these other interest rates are based off of that target rate. For instance, the prime rate, I think it's currently at 3.25%. So in turn, interest rates on all types of farm loans have declined accordingly. And some of these rates are at or near historical lows. Mortgage interest rates have fallen to record lows under even 3%. That's for your 30-year mortgages for qualified buyers. Compared to the world back in 1979, 1980, I'm old enough to remember those years when we had a 30-year mortgage interest rates close to 20%. Today's money almost seems like it is free. And so it's really useful to think about how interest rates do impact prices in the ag sector. And so for the agricultural goods that a farmer wants to buy, it really does matter what those interest rates, what those levels are. Lower interest rates tend to mean higher prices for assets for two basic reasons. It does make it easier to finance purchases because those repayment terms and amounts do decline. And secondly, interest rates represent returns on alternative fixed income investments to farmland. So as those interest rates fall, the attractiveness of these fixed income investments, it could be your 10-year, 20, 30-year, government treasuries, some other fixed investment for a long tenure, they fall relative to farmland, and it provides support for those farmland prices. And I think that's really where your non-farm investors might make an impact. They see all that instability in the stock market, mutual funds, and they notice the low returns of fixed instruments like your government securities, and they might turn to farmland instead. People like tangible assets in times of uncertainty. And they have more access, quite frankly, these days to these land auctions due to the online nature of these auctions. Instead of being there in person on that particular day and having a bidding war with the locals, They can bid online if they choose to do so from out of state. So that might be playing a factor in terms of their increased participation in the markets. So let's look at the commodity prices, and of course I use the cattle markets as an example, as the big driver for Oklahoma. And so I'm using these returns from the LMIC as a benchmark for returns on these mama cow operations. And you can see that, of course, we've had a big drop off since the middle part of last decade. We've had several years of very difficult profit margins. And this is sort of looking at, profitability as in terms of a sort of a net cash flow standpoint. These are returns over cash costs, including some pasture rents. The cow-calf sector is expected to see some profitability in 2020 and then also in 2021. Hopefully we will be able to turn the corner on the cattle economy that really took a nosedive, in the first part of this year. Certainly there will be some producers this year that will make money, regardless of what Mother Nature throws at them or what the economy throws at them. They're managing their forage base. They're keeping good production and financial records. We preach that all the time, and they follow all that up with a good job of marketing. They're scrutinizing every dollar that they're spending, and they're trying to stretch that dollar the best they can. So, those individuals are really, pretty resilient. They will persevere through the thick and thin, and they'll be okay. What we need to really focus on is those that are really operating on the margin, really a thin margin, where their profitability is really being jeopardized by these lower cattle prices, and trying to, assist them go through the dips that we're experiencing at this point in time. But there is some hope and some rebounds in the cattle markets and these returns. And if we do see this, if they come into fruition, then we will see some support in the pasture land markets going forward. But, this is also sort of representative of, when you have lower commodity prices, we have lower farm earnings. And so when the Kansas City Fed surveyed bankers within their district, of which Oklahoma is a part of, they noticed that a lot of bankers within their district for that first quarter, they expected a lot of their farm and ranch customers to have lower farm earnings, in that first quarter of this year, and even more so in the second quarter, from April, June. That just got over with now. And so there's been some real challenges in our lower farm earnings situation. How does that translate, into our credit conditions? Well, we probably will see some increases in carryover debt. And certainly that has been the case in certain states like Nebraska, and also here in Oklahoma. So we have some reductions in liquidity and some increases in carryover debt. What can these producers do? Well, they can liquidate some of these assets, and maybe they're selling some of these less productive land parcels or parcels that just don't fit their portfolio very well, fit somebody else's portfolio better. Maybe they're liquidating some of that. But they're trying to at least restructure or refinance, especially refinance at these lower interest rates, just to at least mitigate the impacts from these lower commodity prices, so that they can service their debt. One fortunate thing is that we have been receiving some, stimulus monies from the USDA. And so that's really helped in terms of enhancing some of these cash flows for a lot of these farmers and ranchers. It's stimulus funds like the Market Facilitation Program and the most recent coronavirus food assistance program will help offset some of that negative risk to commodity prices from not only COVID-19, but also the trade disruptions that we experienced over the last couple seasons. Producer safety net programs like PLC and ARC also help mitigate some of those price and revenue downside risk with production ag. And all these federal programs do provide some limited support to landowners of ag real estate and also to tenants with their rental payments. And we received about $207 million over, the course of 2 seasons here in Oklahoma. Seemed like a chunk of change, and it is. But when you spread that out over, how many acres do we have in Oklahoma, and employed in agriculture? A lot. We have 77,000 farms. Spread that over 77,000 farms, or the number of producers that are operating those farms, it's not so much. And it's really been an unlevel or uneven playing field. Some producers didn't receive a dime from this, so it was a non-event. Others received a substantial chunk of change where it really did provide them some support in terms of enhancing their cash flow and maintaining some liquidity going forward. But overall, it really has provided some support, to landowners and to the rental markets here in the state of Oklahoma. We're better off with it. And so I wanted to, present this slide. It's sort of a good summary slide of where we're at, and I would concur with the Federal Reserve Bank of Kansas City when they said that our farm incomes don't look so good, but fortunately our land values have held steady. All right, so we're very fortunate from that situation because our land values is a key in our balance sheets. Okay, it's a big chunk of change in our balance sheets, and if we can hold that value, we have a good chance to ride out some of these difficult speed bumps that we're experiencing. Okay, so let's go to basically where we're at in terms of a summary slide. The farmland markets in Oklahoma have remained quite stable and quite, relatively steady over the last year, despite the challenging environment for farm income and credit conditions. The cropland essentially was flat, and pasture and all tracts increased at least at a modest pace. But what does that mean for 2020? Well, there's some mixed messages concerning the strength and direction of land markets going forward. It's anyone's guess, but if I had to play a role of Mr. Anybody, my educated guess is that the markets will hold steady for the remainder of 2020. My rationale is this, is that on one hand, we have lower interest rates that have been providing some much needed support, lower operating costs, easier to finance major asset purchases such as land. But of course, on the other hand, like a good economist talking here, we have commodity prices that continue to disappoint. That's pressuring liquidity, many farming situations, and also their credit conditions. It's really a good thing that we have these safety net programs like ARC and PLC and the MFP that came into play in 2019, as they have provided some much needed revenue to landowners and rentals. And so stimulus funds like that will help a lot of producers going forward, but much depends on where the economy lands after the initial fallout from COVID-19. And obviously it's a situation that bears watching. So, basically the bottom line is it all boils down to the financial health of the current buyers and those participants in the markets and the motivations of those sellers within the land transfer market. Okay, so we have updated our land value website reflective of the 2019 data. If you haven't checked it out lately, I would encourage you to do so. Our website is on the left-hand side there. And so I think it's a good clearinghouse of information as to where we've been in Oklahoma and where we're at presently in terms of those trends and patterns. And so you can look at that information and then compare notes with other good sources of information, like from the Kansas City Fed and from USDA. And I think altogether they do, I think, complement each other really quite well. And so, with a combination of some good information here, hopefully we can allow you, the viewer, especially those participants in land transfer market, to make some better decisions concerning your farm and financial futures going forward. And so I really appreciate the opportunity to visit with you this morning on this particular topic. And I hope I gave you, the viewer, a better understanding of the land value markets in Oklahoma and also the trends. And my contact information is listed there at the bottom. So if you have any questions down the road, please don't hesitate to, give me a call, send me an email. And before I turn it over to JC, or if I check any, out any questions, once again, thanks for tuning in. Have a good rest of the day. And I'll turn it back over to JC.
Roger, you have one question from Larry Sanders. Does this suggest more consolidation of operation or operations?
Okay, what was that question again?
If you look in the text or the chat box, it's from Larry. Does this suggest more consolidation of operation or operations?
Well, Larry, I think there is some continued consolidation, in production agriculture that's occurred since, essentially for many decades now. And I don't know really what the pace might be compared to, say, the 1970s, or when we hit the crisis there in production agriculture in the 1980s, in terms of some consolidations. But undoubtedly, these a number of the a large number of farms are getting larger. But what we're seeing here in Oklahoma is that we have a number of these small time producers that may have a roadside stand. They participate in the farmers markets. They're selling from off the farm directly to their customers. I think we're seeing more and more of those individuals also in terms of supplementing their incomes. And it could be a city job, or they're just trying to make a living strictly from a small acreage that they're on. So I'm getting more and more questions, and I'm sure a lot of you are too, in terms of, we purchased a 20 or 40 acre tract, and what do I do with it? Can I raise any livestock? What are the income potentials from that? And what do I need to do to make it work? And so we got a lot of those types of questions from the larger, the smaller producers. The ones that I think are really in jeopardy, Larry, are those that are caught in the middle. Those that are trying to rely on the farm for their primary livelihood, but they just don't have the production volume to make it work. And if those individuals don't have opportunities for off-farm employment, those individuals are really hurting. And so those are the individuals that we really need to focus on in terms of how do we help them, in terms of their farming futures, or how do we, help them, say, transition from farming to something else, and maybe that's in their best financial interest also. Those large producers are doing pretty well. They've got the production volumes, I think, to make it work. But it's those in the middle that really do concern me also. That's a long answer to a short question, Larry, but anyway, that's the way I see it.
Don't see anything else in the chat. Roger, if you'll stop sharing your screen, I'll bring mine up.
Okay. See if I can get this to work. Okay, gotcha.
Sean, how do we look?
It is showing the presentation mode.
What do I need to do?
All right, go ahead and click on display settings and swap presenter view and slideshow.
Got it. Well, the
All
topic I want to look at, very short, very quick. There's some things coming up that we're seeing for individual taxpayers that have come about the last few months that we're still trying to resolve some of the issues that are there. So what we ended up with, and the reason we're kind of seeing the same things that are going on with the Internal Revenue Service, why refunds are late, the other issues that are taking place. What happened? Employees sent home in March. That's the IRS folks. So there was 9 service centers. Pretty much they all closed. Well, they did all close. Some 7 of the 9 opened in May and June. However, there was 2 of those in major hotspots that just reopened last week. So what we ended up seeing as returns were mailed in, even though we had the July 15 postponement of when returns were due, people were still sending those in, but they ended up primarily sitting in a mail buggy. As of about a month and a half ago, IRS started shipping those returns to other locations to get them processed. So if we're really looking at what's going on, and I've been getting calls from farmers and others, individuals, why have I not got a refund? I turned in my tax return, filed it as a farmer March 1. I expected a small refund. I haven't seen it. But right now, if you're looking at it, they're running about 4 to 5 months behind. So if you filed your return in July, like many of us did, you may not see your refund until probably October, November. They have hired some other or additional folks to try to get things moving. However, you're still going to have to kind of watch what's going on. The My Refund and the IRS.gov website will help you figure out the status of where you stand, but don't expect anything to happen real fast this year. You probably been watching in the mail, or the news, the economic impact payments. They're looking at doing another round of these. To what level? Don't know. Congress is going to have to act pretty quick before they go into recess in August. But if you remember what we received, it was $1,200 for eligible individuals, couples $2,400, qualifying children $500 apiece. However, there are some folks that still haven't received that. Questions is, could it still be coming? More than likely, yes. But even if it doesn't, and you don't receive a check in the mail or a debit card between now and December 31, you're still going to get the benefit of that $1,200 or $2,400 credit as a reduction in your taxes due that you pay in 2021 for the 2020 tax year. So all is not lost. And it's going to be interesting to see if Congress passes another round of these stimulus payments, when they'll be coming out and what level those will be. One of the questions that has been arisen is that Congress has to do this and pretty rapidly, because they will typically adjourn in August. There's been some discussion of asking our leaders to hang around a little longer to get the new laws passed, this information out, etc. We'll have to kind of wait and see what does happen there. The July 15th mailing or timing, the filing date. Talked to some individuals in a panic end of last week. Since we moved it to July 15th, there was a lot of folks that, even though they said, well, it's not due, we didn't get it on our calendars. What happens? Well, really no harm, no foul if you have a refund. If you're filing for a refund, no penalty applies because you've already paid in the full amount. You'll still get the refund even though you filed a little bit late. There will not be any reduction in the amount of the refund that you get. However, if you owe, you're going to want to file that as quickly as possible because you're going to want to stop that penalty and interest, or you apply for an extension, it gives you till October 15th. A lot of folks have done that as well. But those are the two things you need to get done if you find that you owe. Get it taken care of now so to stop the penalty and the interest on the amount due. If you have questions, send me an email, give me a call, email preferably. That kind of gives you an idea of where we stand. I'm still waiting to get information on the current 2020 tax law changes. Every time I turn around, there's something new coming about, being talked about, but nothing has been finalized. We're still waiting on a lot of information to be put out by IRS, U.S. Treasury as final rules. And again, those haven't come forth. With the IRS shutdown, everything is running way behind. So we maybe not be finding out all the pieces of the puzzle till the end of the year. And the cynic in me says we may not know all the rules until sometime in 2021. So with that, any questions? Not seeing any yet. I thank you for listening in. Hope you gained some good information. I will make sure everybody gets good credit here for attending, and we'll see you next time. Our next session is scheduled for early September. Right now, I'm not sure. I've got probably 2 people in the wings and kind of waiting to see what happens with commodity prices, crops, livestock. Kim Anderson, Daryl Peel have both indicated they may be interested in giving us an update at that point in time. I will keep you informed. So with that, again, thank you for attending. We will catch you next time on the current issues. Thank you and goodbye.